What I'm about to show you is the most significant monetary shift since the end of the gold standard in 1971. Right now, the US dollar index has fallen to a nearly 4-year low, officially breaking below the key 97.0 level. But here is what they are not telling you on mainstream financial news. The BRICS group has launched a working prototype of a gold-backed trade currency known as the unit. The unit is a digital trade instrument backed by a reserve basket composed of 40% physical gold and 60% BRICS national currencies. This is not a proposal. This is not a theory. The pilot was initiated in October 2025, with each unit initially pegged to 1 gram of gold, and it is now operational. The BRICS Pay expansion in 2026 has already reduced USD usage in intrablock trade by roughly two-thirds. Two-thirds reduction in less than a year. If you own gold or silver, you need to understand what is happening. If you are holding dollars, you need to understand why the next 90 days could change everything. The dollar's 90-day countdown has begun. And by the end of this video, you will understand exactly what it means. Welcome to AG Profit Hub. This is where we cut through the noise and expose what is really happening in precious metals markets, while everyone else feeds you the official narrative. Subscribe right now and hit that notification bell, because this is the kind of analysis you will not find anywhere else. If you find value in this video, smash that like button. It helps the algorithm show this to more people who need to see the truth. And trust me, what I am about to reveal is something the mainstream financial media refuses to connect for you. Let me explain exactly what BRICS just launched, because most people do not understand this, and that misunderstanding could cost them everything. The unit is a gold-anchored digital trade currency designed for cross-border settlement. Its launch coincides with record public anxiety about dollar debasement, as shown in Google Trends data shared by Bloomberg. Here is how it works. The prototype uses a 40% gold and 60% BRICS currency basket that adjusts daily. The unit's mechanism works with a reserve basket, 40% physical gold, equal to 40 grams in the initial test, and 60% BRICS currencies, split into 5 equal weights of 12% each among the Brazilian real, Chinese yuan, Indian rupee, Russian ruble, and South African rand. And here is the critical insight. The unit makes gold part of daily settlement, not just storage, thereby shifting the role of metal from a passive reserve to an active trade asset. Gold is no longer just sitting in vaults. It is now being used to settle international trade. This is a fundamental transformation in how the world uses money. Importantly, the unit does not replace national currencies. Rather, it aims to act as a neutral settlement tool that reduces reliance on the US dollar in trade between BRICS economies. The unit would allow them to settle trade without using US banks, store value using gold instead of foreign currency reserves, reduce exposure to dollar liquidity shocks, and build a monetary framework independent of Western systems. This is not about replacing the dollar overnight. This is about building a parallel system that makes the dollar optional, and that is far more dangerous for dollar dominance than any direct attack. Now let me show you the infrastructure BRICS has built, because this is where the 90-day countdown begins. BRICS unit is launched in 2026 after what occurred on October 31, 2025. In various key reserve levels, the BRICS unit start in 2026 has exploited the collective gold reserves of the member states of more than 6,000 tons. 6,000 tons of gold backing this system. That is not a symbolic gesture. That is real monetary firepower, and the membership now gives them critical mass. As of early 2026, there are 10 BRICS member nations: Brazil, Russia, India, China, South Africa, Egypt, Ethiopia, Indonesia, Iran, and the United Arab Emirates. But that is not all. At the 2024 BRICS Summit, 13 nations signed on as BRICS partner countries, including Algeria, Belarus, Bolivia, Cuba, Kazakhstan, Malaysia, Nigeria, Thailand, Turkey, Uganda, Vietnam, and Uzbekistan. The expansion to BRICS 10 now sees the bloc representing 46% of the world's population and 37% of global GDP, strengthening its ability to establish an alternative financial system outside of SWIFT. 46% of the world's population, 37% of global GDP. This is not a fringe movement. This is half the planet building an alternative to the dollar system. and they have already built the infrastructure. China's cross-border interbank payment system now connects nearly 5,000 banking institutions globally. Standard Bank, Africa's largest by assets, became the first on the continent to link directly into China's CIPS. This integration means African businesses can now settle payments with China directly in renminbi, without the use of any intermediary currency, notably the United States dollar. The system has engineered connections such as Russia's SPFS, China's CIPS, and India's UPI. And here is the 2026 agenda that makes the next 90 days critical. In January 2026, the Reserve Bank of India proposed linking the central bank digital currencies of member nations. An interoperability plan is set for the 2026 BRICS summit agenda in India. India hosts the summit this year. The interoperability plan goes live, and the gold-backed unit scales from pilot to operational. Now let me show you what is happening to the dollar right now, because this is where the crisis becomes undeniable. The dollar's share of allocated foreign reserves of central banks and governments has been decreasing over the last 2 decades. The share of the US dollar in global foreign exchange reserves declined from 71.19% at the beginning of 1999, from 71% to where we are today. IMF COFR statistics show that the dollar remains the leading reserve currency in Q3 2025, comprising 56.92%, 56.92%, down nearly 15 percentage points from 1999, and the decline is accelerating. In January 2026, it fell another 1.2%, following a 10% decline over the past year against other major currencies. 10% decline in 1 year. That is not gradual diversification, that is active flight. And here is what the institutions are saying. De-dollarization is unfolding in central bank FX reserves, where the share of USD has slid to a 2-decade low. In fixed income, the share of foreign ownership in the U.S. Treasury market has fallen over the last 15 years, pointing to reduced reliance on the dollar. De-dollarization is most visible in commodity markets, where a large and growing proportion of energy is being priced in non-dollar denominated contracts. This is J.P. Morgan, one of the largest banks in the world, acknowledging de-dollarization across reserves, bonds, and commodities. And here is the most alarming data point. While foreign investors remain the largest constituent within the Treasury market, their share of ownership has fallen to 30% as of early 2025, down from a peak of above 50% during the global financial crisis. From 50% to 30%, foreign ownership of U.S. Treasuries has collapsed by 40%. The world is selling American debt. Countries are no longer treating the USD as a fully stable reserve currency. Instead, they are managing and hedging their risk against it. The rise in gold and silver prices signals this declining trust in the dollar. Now let me tell you why the next 90 days are critical, because this is where multiple timelines converge. The United States national debt has reached a precarious milestone, hitting 100% of gross domestic product and placing the nation on a trajectory that could trigger 6 distinct types of fiscal crises. If the national debt continues to grow faster than the economy, the country could ultimately experience a financial crisis, an inflation crisis, an austerity crisis, a currency crisis, a default crisis, a gradual crisis, or some combination of crises. 6 types of crises, all possible, all connected to debt that is now spiraling out of control. Interest costs on the debt surged to roughly $1 trillion last year, consuming a near-record 18% of federal revenue, an amount comparable to the entire Medicare budget. $1 trillion just in interest payments. That money cannot be spent on anything productive. It just services existing debt. And here is the warning from one of the world's most respected investors. Billionaire investor Ray Dalio issued his most dire warning yet, likening America's debt crisis to an approaching economic heart attack. We're spending 40% more than we're taking in, and this is a chronic problem. What you're seeing is the debt service payments squeezing away buying power, like plaque in the arteries. The U.S. has entered what Dalio calls Phase 5 of the big debt cycle, where debt becomes so excessive that even central banks cannot service obligations without devaluing the currency itself. Phase 5, the final phase before currency collapse. And here is what happens in the next 90 days. The 2026 BRICS Summit in India will formalize the interoperability of member CBDCs. The unit pilot will scale to larger transaction volumes. More commodity contracts will shift to non-dollar pricing. And the U.S. must refinance trillions in maturing debt at higher interest rates. All of these events converge in the next 90 days, and each one weakens the dollar's position further. Now let me tell you what this means for you, because understanding the situation is useless if you do not know how to act on it. If you are holding dollars, understand the risk you face. High and rising debt and deficits can weigh on a nation's currency by elevating inflation risk, reducing market stability, and weakening fiscal credibility. Forced actions to lower short-term rates, cap long-term yields, or monetize debt can debase the currency. The dollar is not collapsing overnight, but it is undergoing a slow burn decline. And that slow burn is more dangerous and consequential than if it were a rapid collapse. If you are holding gold and silver, you are positioned exactly where the world is moving. The pilot signals a structural move toward de-dollarization and strengthens long-term global demand for gold. Central banks have been buying over 1,000 tons of gold annually since 2022. They are preparing for exactly what BRICS is building. And now that system is going live. The unit follows that shift, using gold to support trade between BRICS nations. This design can strengthen gold's position in global finance. Gold becomes a tool for government-level transactions. Gold is no longer just a store of value. It is becoming an active medium of exchange in international trade. That fundamentally changes its demand profile. Let me leave you with this. BRICS has launched a gold-backed settlement currency. 10 member nations representing 46% of world population. 6,000 tons of gold reserves backing the system. 2/3 reduction in dollar usage for intra-block trade. Dollar's share of reserves at a 2-decade low. Foreign treasury ownership collapsed from 50% to 30%. U.S. debt at 100% of GDP. Interest payments consuming $1 trillion annually. Historical reserve currency transitions unfold through gradual erosion, not collapse. That is StoneX's Director of Global Macro Strategy, telling you exactly what is happening. Not a collapse. An erosion. A slow transfer of power from west to east, from paper to gold. We are not refusing, not fighting the dollar, but if they don't let us work with it, what can we do? We then have to look for other alternatives, which is happening. That is Russia's position. And it is being adopted by 46% of the world's population. The dollar's 90-day countdown is not about the dollar going to zero. It is about the dollar becoming optional. And in a world where the dollar is optional, gold becomes essential. Drop a comment telling me whether you think the dollar can maintain its dominance or if the shift is permanent. I read every single comment. Subscribe if you have not already. Hit that notification bell because this story is accelerating and you do not want to miss what comes next. BRICS just announced a gold-backed currency. The dollar's countdown has begun. And now you understand why. This is AG Profit Hub, because the real story is never on the surface. I will see you in the next one.